You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
I believe we had a capitulation move, but we've yet to have a slingshot move because, like I said, the gold price is yet to get back above 2,000 and stay there.
Welcome back to Mining Stock Education. I'm Bill Powers, chatting with my friend David Erfle from JuniorMinerJunkieWithAY.com. Dave, welcome back on for your monthly check-in on the show. Gold has been powering higher, about $200 in the last 30 days amidst financial, macroeconomic issues, as well as war. So that combo has really powered gold higher. Do you think it stays here and goes higher, or are we going to see a drop back down?
Well, thanks again for having me on, Bill. The war in the Middle East has made the geopolitical picture a lot more precarious now. It's weird how these similarities to the mid-70s continue to pile up, and the war in the Middle East is like the cherry on top, right? I mean, 50 years to the day is when Hamas attacked Israel 50 years ago to start what was the beginning of the Yom Kippur War, and that led to an Arab oil embargo. It led to the price of oil tripling, the price of gold doubling, and at the same time, you know what was going on before that was you had debts in the U.S. from the Vietnam War, creating stagflation and inflation, and you basically had the Federal Reserve trying to fight inflation, and growth was slowing and inflation was rising, creating the term stagflation, and it's all happening again now, and it's eerily similar to what was happening then, and with the U.S. debt situation, and just completely untenable. I mean, it's $40 billion a day now is added to over 33.5 trillion now. And in 45 days, it builds up another trillion. And, the U.S. debt already, that 33.6 or 7 trillion or whatever it is now, 70% of it was a cumulative interest rate. So these bond yields keep going up, and the interest keeps going up, and the deficit in the U.S. is already close to 2 trillion, and in 2 to 3 years it'll be 3 or 4 trillion, and these numbers, they're just way out of control now. And I know these deficits and these debts, everyone's saying debt doesn't matter, and well, it doesn't matter until it does. And the situation is coming into where this Middle East turmoil has, like I said, it's made the geopolitical picture so much more precarious. And at the same time, the interest rates are causing this vicious debt circle, right? Like higher interest rates, that they cause higher funding costs, and in turn that forces higher debt issuance, and then that causes further bond liquidation, which causes the higher rates. So, the gold price is looking at this and saying, okay, it's time to go up, especially after we had this $1,900 floor was penetrated, and the bears were able to get a stop run below 1,900 and force a move all the way down to 1,800. Bullion banks covered their shorts, and now we've had this slingshot move of a $200 price move in 2 weeks. And so, it ran up to $2,000 a lot faster than, the gold price lost 1,900 and only got down to 1,800. It went down less than $100 in a longer amount of time than it took the gold price to go up $200, twice that much, and go right up to that $2,000 level again. And that $2,000 level has been resistance for 13 years now. And if you take a look at the monthly chart of the gold price, you see these shooting star reversal candles every time it gets to that region. So it turns around and reverses every time it gets there. So basically, it's like the boy who cried wolf. Yeah, gold's back up to 2,000 again. It's just going to reverse and go back down. And that's why you've got the miners and now and it's basically silver has been showing relative weakness on this move. I mean, you saw the gold price move up $200, yet you look at the GDX and the GDXJ, and they've got just small little white candles. So investors are just numb to the fact that the gold price can't get above $2,000 and stay there.
So silver is the key thing to watch, Dave? Basically,
silver and the mining stocks. You know, you've taken the 30 level now on the GDX is now stiff resistance. I think that $30 price level now is in line with the $2,000 price level of gold. If you see the gold price get over 2,000 again and attempt to break out for the fourth time, I mean, this is what happens with these commodity markets. Triple tops, you know, are extremely rare. A level is tested 3 times, and then the fourth time is usually the charm where it goes up. And you know, it's not a head and shoulders top. If it was a head and shoulders top, it would look more ominous. And all it is it's the gold price trying to get above 2,000 for 3 years now, building this huge base, and bigger the base, the higher in space. I mean, when gold got to 1,000, it only took a year to clear it. And look, once it did, the gold price pretty much doubled within a couple of years. Well, now this base is 3 years, and you know, pick a catalyst. I mean, there's so many of what could take the gold price above 2,000 and keep it there. I mean, you've got geopolitical catalysts, you've got macroeconomic catalysts, you've got we're going into an election year that's just going to be crazy. I mean, you've got the Republican candidate is probably going to be in court until the election. And then the Democrat candidate is trying to be impeached by a Republican-controlled House. They can't even figure out who their speaker's going to be. And, you know, and everybody's forgotten that hey, we've got this debt situation that's coming to a head on November 17th the can was kicked down the road last month. So it's just a big mess. And, you know, gold is sniffing all this out.
And so you're bullish gold unless it breaks that 7-year gold stock cycle that you've talked about, right? You would need to see that happen before you would turn on gold and possibly sell some of your gold juniors.
Yes, I mean, I don't see that happening. I mean, the gold stocks bottom every 7 years. 2001 they bottomed, 2008 they bottomed, and 2016 they bottomed, and 2015 they bottomed, and in 2022 of last year they bottomed. We had the GDX hit, I think it was 2150, and it's made a higher low now. And can it go down to retest that low? I think it probably could if we see more panic in the stock market and in the gold market, you know, and the gold price gets caught up into it and gets back below 1900 again, which I don't see, but anything's possible with the gold sector. But yes, but what didn't bottom in November of last year, October, November of last year, was juniors, right? The miners bottom, the GDX and the GDXJ, which are basically, you know, the majors and the mid tiers, they bottomed, but the juniors continued to go lower. And a lot of them are trading at prices last seen in 2016 even, and even lower. These things are being given away for pennies on the dollar for what they've got in the ground. So the gold price at $2,000 needs to be a floor before these things start to get love again, because basically it's just been us resource investors trading amongst ourselves for the past 10, 12 years, and the generalist has been out of this sector. And if you take a look at the volume on the venture, it just continues to dwindle lower and lower and lower. The last time volumes were this low, gold was at $250 an ounce. And when it's down like this, and all these quality companies, they come out with good results, or they've done a great job of de-risking their project, and they've got multi-millions of gold ounces in the ground in a great jurisdiction. But if they need money, the street knows this, so they can play around with their stock and they can get even cheaper.
So how do you discern a bottom, a capitulation event, like you mentioned, January 2016, where we saw the junior mining stocks turn up? I was a part of that, so I experienced that firsthand. So if a company needs to be financed, you've advised listeners, make sure they have at least 18 months of runway before you buy the stock. But I think I remember in 2016, some of the ones that weren't financed began to run a little too before they got recapitalized. So how do you view that, Dave?
We had a capitulation event, I believe, recently in this month, tail end of last month, in September, October, in the junior sector again. And I believe we had a capitulation move, but we've yet to have a slingshot move because, like I said, the gold price is yet to get back above 2,000 and stay there. I mean, each time it gets to 2,000 or even goes a bit above it, we get that reversal. It goes back down, and even more people and even more investors get rid of their juniors, get rid of their gold miners. I don't want anything to do with gold. But what needs to change is that $2,000 price needs to be a solid floor, and investors need to start to have some fear in the stock market. I mean, you take a look at the S&P 500. It closed below its uptrend line from last year's bottom on Friday, and then it started to sell off this morning, but we had a reversal. So that 4250 level, it's still playing with that. And basically, this, so there's basically seven stocks that are driving the S&P, right? The seven magnificent 7 AI stocks. And the poster child for these stocks has been NVIDIA, right? And NVIDIA's gone up 5 times since its low last year. And it's got a head and shoulders top on it right now. And, the PE ratio is completely out of control, and, the book value and everything and all that, which I'm sure your audience knows. So if you take a look at NVIDIA, it tried to break that neckline today and it reversed, and it's got a white candle on it now today. So I think NVIDIA gets below 400, and, you start to see these other stocks, Microsoft, Apple, and these other AI stocks start to sell off, and we start to get some fear in the stock market. That needs to happen before gold stocks start to get a bid. And I don't think that happens until the gold price, like I say, gets above 2,000 and stays there. We need to have a monthly close above 2,100 in the gold price, and that will get momentum traders. That'll get everybody in, because that will technically signify a breakout of a 3-year base in the gold price. Like I said, that $2,000 price level is so significant. It ran up to 1925 in 2011. Everybody and his brother was saying it's going to 2,000, it's going above it. And all the CEOs of mining companies believed that also. So they went out and bought all these, low grade bulk tonnage projects that weren't going to be economic until the gold price had a $2,000 floor, and they all started to price that in already, and it pretty much ruined the mining sector, because they did it all with dilution. They bought all these companies with their overpriced paper, and they've learned their mistakes. They've learned from their mistakes from all this, but the gold price going sideways for so long and not being able to break out, while the stock market continues to go up, and now people get 5% return on their money in the bank. Why should I own gold? Why should I own gold stocks? So all that's done is create an incredible opportunity, because this always happens in this sector. You get everybody out of the gold pool before the next major up leg begins, and it always starts with a false move. We just had that false move, but that false move is not finished yet. It's only got to 2,000, so it's probably going to consolidate here for a while, because that's a really major level, and while Israel waits on the ground to invade, right? And will that bring in Iran? Will that bring in Syria? Will that get those warships that are sitting in the harbor, the U.S. warships, start firing on things as well? I don't know. Is this going to escalate into World War III? I certainly hope not. I don't want that to be the reason why my gold stocks and my gold goes up. That's the last thing I want. But it is what it is. I mean, we've got the geopolitical and the macroeconomic lined up here, because the market knows the Fed's not going to raise rates anymore. You look at the CME Fed Watch tool. on Friday after Powell was done speaking in New York, it took a rate hike in November completely off the table, and there's actually a 2% chance of a rate cut in November now, which is a week away, and only a 24% chance that the Fed's going to raise rates in December. The Fed's done raising rates. They can't raise rates in this environment anymore. Even Jerome Powell said that it takes 12 to 18 months for a rate hike cycle like this to permeate the system. And he's also said the bond market's done a lot of the work for us. So the Fed's not going to raise rates anymore. So, and as soon as they're forced to cut, and as soon as they start to add to their balance sheet again, that's when gold will really take off. Because eventually, that's where this is going to lead to. It's going to lead to the Federal Reserve buying up things again and backstopping everything, and creating another nightmare as far as the value of our money is concerned. That's what government does. They create these problems, and then they pat themselves on the back for fixing them.
Yeah, as a wise man once told me, he said, it's amazing what you can get done in politics if you give somebody else the credit, because exactly. Politicians don't mind taking credit for things when it goes right.
Yeah, right. Vote for me and I'll fix this. Mm-hmm. Right.
Dave, do you follow the short report on the little juniors you invest in? Does that matter to you, like the short interest in particular stocks?
It does, because all these major moves always start with short covering. I mean, that's what happened in 2016, right? We had the GDX and the GDXJ down 85% in 4 years going into 2016, building a base for like 6 months, and then the second week of 2016, that base was broken, right? And we saw selling go below that base, and it faked a lot of people out of position. There was myself, and I know a lot of other people, a lot of other investors that I know and that I don't know, were accumulating quality juniors into the end of 2015, expecting a big move in the first quarter. But before that big move, it had a false move lower, and it got a lot of people out of position. They're like, oh, I'm too early, there's going to be another move down, and they got stopped out or they sold. This is why you can't use stops in these juniors, right? You just can't. And virtually on the same day that it broke, it was an intraday reversal, and it was an intraday reversal. It got back above that 6-month line that it was accumulating at, and it didn't stop for 6 months. And a lot of these juniors went up 5, 10, 15, 20 times in 6 months. I believe that is in our future again. And what it did also was it opened the finance window, right? And it opened the finance window for all the lifestyle companies too. So, 85% of these juniors are pretty much uninvestable as far as I'm concerned. Now, you've heard Rick Rule say this 100 times, and he's right. It's my job to sift through them all and find out the ones that are investable and accumulate them and just hold on to them to wait for this slingshot move to happen. And it could happen on a day where there isn't a catalyst. The catalyst could happen beforehand, and it just doesn't happen until that algorithm switch flips in the opposite direction. And all of a sudden, everything starts going up as opposed to going down, because a lot of these stocks have these bullish falling wedges. You just don't know where that falling knife is going to stop, right? And then when it turns around, it goes up so fast. And these stocks go up so fast because the big reason is because this sector is just so tiny, right? I mean, if you took the entire mining sector and put it into one company, that company would have a market cap of about $380 billion, which is the market cap of Home Depot. We just have to wait and find out what that catalyst is going to be, when it's going to happen, and you'll know it too. You'll start to see these stocks just take off and have these big, huge white candles. But we don't know this time around is if these lifestyle companies are going to get financed again. I hope they don't, because a lot of them need to go away. There's too many of them. They need to go away, or the better ones need to merge with others. And because a lot of things have to change in this sector to attract that generalist investor. Because, they're going to get into the Newmonts, they're going to get into the royalty companies, they're going to get into Royal Gold, they're going to get into Franklin, Nevada, they're going to get into Newmont, Barrick, and then it trickles down into the mid tiers, and then it finally gets down to the juniors. And sometimes it all happens at once. In 2016, it all happened at once because we had that 85% move down in 4 years, and the shorts who just cleaned up, who were shorting all the way down, the switch flip, time to cover our shorts. And then when the short covering always starts the major move, and then when value investors see the short covering move start, that's when they move in. So you got a combination of value investors coming in to short covering, because they've got to buy back their stocks that they shorted to profit. That's how it works. And then you have the investors that are value investors that are waiting around, that see, or they're accumulating now, or they're waiting, that see how cheap these things are, and they're just waiting for that day to happen, as it always does in this sector.
Dave, last question. When it comes to private placements, you and I in the past have only done them if we usually get a warrant, which means if we're right on that speculation, we get the added upside and leverage of the warrant, which is a right to purchase a share at a given price within a given time frame, for those that don't know. So recently I had some warrants expire out of the money, and the broker says, we have. Right, we have. But the point I'm building to, which is going to form the premise for my question, is they were in the money, maybe 100% within the last 12 months, but they were out of the money when it came time for expiry. I've had others where it's a 40-cent whole warrant, and the stock at one time traded at $1.50, but because I had 2 years of time premium still in it, I didn't exercise. Exactly. Yeah. And then it expired worthless. Another one. In that boat. Yeah. So I have about 4 or 5 experiences where I had like nice profits, at least on paper, for the in the money portion of the warrants. But because I had so much time premium in it, I didn't do it. You have any stories or wisdom for me on this?
Oh yeah, it's the same thing has happened to me. And the great news for your listeners is most of your listeners, they're not accredited investors. So they're like, okay, that's I'm sorry, too bad for you, but all that does for me is it gives me an opportunity to load up on these things for cheaper, and I don't have to deal with I don't have to be an accredited investor. I can buy these things so cheap right now that it really doesn't matter. I don't need a warrant. And no, I've had things that were up to a certain level, and I thought, well, should I go ahead and exercise them now? Well, I've got a couple more years left, and it sure looks like this bull market's going to go a while, so I'm going to go ahead and wait. I've left a lot of money on the table that way. Absolutely, I've done the same thing. Matter of fact, I stopped doing private placements a couple of years ago. I mean, as soon as they introduced the rule of the legend removal rule of will sell, have sold legend removal, you have to sell the stock before you get the legend removed, and all these different rules and the service fees they keep adding. I know recently they added even more service fees, and they won't house your certificates if the stock is less than 50 cents, and all these rules. It's like they're saying, you know what, United States investors, we just don't want your money. So I listened a couple of years ago, and I stopped participating. It doesn't make sense anymore. It's not worth having to pay all these extra fees, having that have sold, will sell, legend removal, because Canadians and international investors don't have to deal with legend removals. They could sell their private placement shares 4 months and a day after they did the private placement, and we have to continue to wait and pay extra fees. So it's just not worth it. And especially now where a lot of these things are trading with perpetual warrant prices. So why take the chance of getting into a private placement and pay extra fees when you don't have to?
Dave, your website is juniorminerjunkie.com. Still open slots in your subscription, which you limit to 500?
Yeah, a little more now. Absolutely. Yeah, but I give my subscribers a pretty comprehensive look at what's happening in the marketplace, not just in the junior sector. anything that affects the gold price, I let them know about. I give them a macroeconomic overview each week, give them a technical analysis on each stock. I give them the top 10 news stories, and I break down all the news all the news releases of the companies also. So it's a pretty comprehensive weekly update.
Excellent. Well, Dave, always appreciate your insights. We'll be touching base with you in about 30 days.
Look forward to it, Bill. Thanks.